Next time we'll let's see. No, we're not. It's not going to do it with SAP Business One. I went through the learning objectives, and actually you guys can see that, right? I just won't run the slideshow. So
yeah, we see
we're going to, right, we're going to identify the steps required to prepare for the year end, complete the year end, look at completing a year end inventory count, what's involved, reconciliation of the GL accounts, talking about the preparation of the accrual entries, complete the tax reporting, production of your year-end financial statements, and to prepare SAP Business One for the upcoming fiscal year, and complete the year-end process checklist, which is part of the documentation that we'll send out, which is how to perform the year-end closing in SAP Business One. So what we're going to do is we're going to discuss the period cutoff, what preparation you should do in SAP Business One, the system procedures, the closing activities, those accounting reports that you need to run and save, the financial statements, and preparing for a new fiscal period. Okay. Year-end cutoff is really important, as I had said. The proper cutoff is critical to achieve your accurate financial statements. So it's the date that all current transactions are recorded. So any transactions that are related to that fiscal period should be recorded. If they come in after the date, then you prepare accruals for to ensure that you've got the matching principle in place and things are matched to the right period. Okay, so I'm now going to take you into SAP, and we'll talk about the document numbering, how to complete, make sure we've got completion of documents, and so forth. Okay, so here we are, and we'll start with. Okay, so it's important that you want to check your document numbering. One of the practices that I've always had in the past is a check on sequential numbering of all documents to make sure that we don't have duplicate numbers and that we don't have any missing documents. So to do that, you want to go into your administration, go into utilities, and go into check document numbering. Now, this will bring up a list of all of your documents, and you could pretty well go through and check them all off and then run this report, and it'll tell you whether you have any duplicate or missing. So now you see down here, can you folks see the message at the bottom of the screen where it says no duplicate or missing documents found? Anybody out there see that? Because it's in small print down at the bottom. So I went okay, and it told me that there was no duplicates. So once I've determined that there is no duplicates, I want to make sure that I'm checking for completion of documents. And is everything posted? So you want to make sure that you're looking at all your deliveries and returns, and what you want to be able to do is go into your reports, go into like your sales and purchasing, and you want to look for your draft reports, payment, document draft reports. Sales and purchasing, document drafts reports right there. So this will tell you whether you have any draft statements out there. So for example, here I've got some documents that may have some drafts that are indicating to me that not all of the transactions have been recorded, and I need to ensure that I've posted any draft documents that may be in place. So the next, you want to make sure that you don't have any negative inventory on hand. So you want to be able to go into your inventory, have a look at your inventory reports, and bring up your inventory status report. And this will tell you, so I've got all my different warehouses. I've already selected some items that I want to look at. And here it's telling me that I have all positive in stock. I've got so much committed and available. So there is no negative inventory in here. If you did find negative inventory, then you should do a count adjustment to clear the inventory out of there and create a journal entry for that. Next, you want to make sure that you've got all of your payment cycles completed. So you want to make sure that when you go into your banking and you go into the payment wizard, the payment wizard is going to tell you whether you have any outstanding payment runs. So if you'll want to make sure that there isn't, at the year-end one check run that hasn't been posted through, and that's where you would find that information running with your payment wizard. If you have statistical and clearing accounts, you'll want to go in and have a look at to ensure that all your clearing accounts are zeroed out and that they're posted to the proper transactions. And if you have statistical accounts, you'll want to have a look at them and ensure that the stats are exact, and then you can close those accounts. And then you want to have a look at your bank statements and do the bank reconciliation and make sure you have all of your statements. I know that some of you may be integrated with your bank and be pulling in your statements, and you'll want to make sure that you've received the last financial statement. Once you've done those initial checks, then you get into your inventory transactions. You want to get ready to do your physical count. I know some firms will do a count before year end or shortly before year end in order to not get too much stuff occurring at once. But a lot of companies will cut off on the last day of the year and do a complete physical count at that point in time. It's about the most accurate way that you can do it. So what you want to do is go into your inventory transactions and look for your inventory counting transactions and bring up your inventory counting. This is where you will select the items for your count and create your count sheets. You can have a couple of different teams doing counting, or you can do a single. This is set for a single counter, or you can have multiple counters. A single counter, you're taking the risk that there's a miscount, but you'll use their data to input into your count sheets. With multiple counters, you do a comparison of the two counts to make sure that you've got the same. It's probably a better internal control practice. It's best practice, actually. So one of the things you want to do is make sure that you're freezing transactions, so no transactions are going to go through after you've started your count. So in this screen here, you'll freeze these items. So here I better look for bin location, and then you'll want to freeze all of those items so that no transactions are going to occur. And that's at the inventory, and then you can use these as count sheets for your year-end count. The other thing that you want to look at is to make sure that you lock the document numbering. So you can go into your administration, go into system initialization, and go into document numbering again. And in here, you'll want to lock that document numbering system by checking that box. And that way, if somebody tries to enter an accounts receivable invoice or a inventory receipt, then they won't be able to do it because it'll tell them that the transactions are locked. So that's what you need to do with your inventory and your counting. Okay, so
James?
Yes.
Quick question. Okay, so the locking is just during the count. Then you unlock once you've entered in your adjustments, and you can
Yes.
unlock, and then that's what I wanted
Yes.
to know.
Once you post it,
Mm-hmm.
yeah. Once you post your transaction, you post your count results and go through the the variance investigations and do any adjustments that you need to do to your inventory. And then once you post those transactions, that should unlock the transactions for you.
But when you
Uh,
say unlock, we have to manually unlock it,
uh,
correct?
I think
Like,
once you posted it, it should unlock it should unfreeze the items
okay,
once you post the counts.
okay.
Okay, so now so that covers the perpetual inventory. Some people will have a non-perpetual inventory system, which is accounted for completely different. In a non-perpetual inventory, there is no inventory transactions that flow in and out of the inventory subledger. It basically, you're taking a physical count at one period and taking a physical count at the end and recording a journal entry to account for your inventory. So that's the main difference. So the next step is going through and looking for negative balances in your business partner accounts. So if you have an accounts receivable that's in a negative position, you have to reclassify that to be an accounts payable, and vice versa. If you have a negative accounts payable, you'll have to reclassify that as a accounts receivable. Typically what I've done in the past is I just treat them as accrual entries and just do an accrual entry and leave the negative balances within the subledger itself or on the business partner accounts. And then once you reverse those entries, they're there. But it is year end, and it's a good opportunity to clean up that kind of stuff. You don't want to be carrying a lot of, I find you get a lot of little balances in that because of adjustments from payments or from cash receipts. So it's better to clean it all up at year end and, post it through cost of goods sold, be done with it. If you get some recovery in it, well, that's a good thing. But most of the time I find that if it's very, very old, you're not going to see any activity on it anyway.
James,
Okay, so yes.
James, I have a really quick question, because we could have credit balances in AR due to credit memos that are issued to our customers.
That means you owe the money, right?
Correct. Okay, so I know it's a liability on my part, but I wouldn't do a reclass for presentation.
Well, just for presentation purposes. So you're not actually going to reclass the business partner itself,
Yeah.
but you may create an accrual entry so that your account, comes out of your receivables and goes into your payables. So say you had a customer and you owed him $200.
Yeah.
Well, that's not a receivable. So I would, do an accrual entry that if you had an accounts receivable contra account and an accounts payable contra account, I'd post them to those values or to a suspense account in that area so that your liabilities are correct. I know that if you're getting a review engagement or you notice to reader, that stuff is not all, you're not going to get that much pressure from your accountant to do it, but if it's an audited financial statement, you'll reclass. And even if I've had, notice to reader and that, it's just tidier and it reflects more fairly your balance. Because sometimes you can have a lot of it. And,
I understand. It's just that in theory, my accounts receivable is actually a control account, so I shouldn't be putting any manual postings into it.
That's right. That's why. That's why. And you can't manually post to the control accounts anyway. So what you would do is have I typically have one suspense account in each area.
Okay, that's what you do.
Okay. Or clearing account, right? You set up a clearing account and you post the accrual to either to that account or you account for it in your accrued liabilities.
Okay.
Right. So that'll handle your year end. Okay. So once we've straightened out all the balances and got them under the right classification in order to meet GAAP, because it is generally accepted accounting principles that you do that. Then we get into performing the year-end closing itself. So under administration, you go to your system initialization, and you're going to start with looking at your posting periods. And in here, what you'll want to do is close out periods that you're finished with. So you can go into that period using the yellow arrow, and you can go in here and you can make it a closed period or lock the period. In order to ensure that nobody posts to them, I typically may lock the period, or you can leave it unlocked except for sales, so that if there's sales that occurred that where it is relevant to that period, it'll allow you to post the sales, but everything else is blocked from being posted into that period.
Okay, so what's the difference with lock versus closing?
A closing period means that you've done a period end close on it, and a locked period means that you can't do any transactions. You can go back to a closing period and do a prior period adjustment.
You can?
Yeah.
Okay.
Yeah, you may have to unlock it, change the status to unlocked, and then do a prior period adjustment. But once it's locked, then nobody can do any transactions in there whatsoever. Okay, so now the other part of your year-end is going to be creating your posting periods for the next period. So what you'll do is go in, create your new period, and sub-periods and months, because we use months, all the periods will be unlocked for status. Now the one thing I do is I always go out about 60 days on due dates, because if you lock down your period and you're posting in December with a due date that isn't open, it won't let you post it. So I typically will go 30/04/2018, and then that gives me a few periods afterwards that I can do my posting to. And I do it to the next one too. It's kind of redundant, but it's just a habit that then I'm sure if I have to post anything into those dates, and then I'll add those and say, okay, so now I've actually just created my next fiscal year. Okay, so that's part of your year-end closing. Now, the other thing that you want to do is, as part of your year-end closing, is your reconciliations of your business partner accounts. So if you go into your business partners, there's an internal reconciliation function in there. And so you can bring up your internal reconciliation. Typically, the reconciliations are done automatically if everything is in sync. So if your customer owes you $100 and he sends you $100, when you post it, it's automatically reconciled. But if they sent you $75, then you have to post it to an account, and then it doesn't automatically reconcile. So if you have a bunch of short payments and items like that, then you'll have to go in and manually reconcile those transactions. So, and when you run your reconciliation reports, you always want to get your balance back to zero. And let's see. So you'll get your internal reconciliation, and you'll notice that it's down here at zero. So let's say, for example, this client here sent me $6,700 instead of $6,780. When I do the manual reconciliation, I'm going to have an $80 balance here. So that's where you can use the adjustment function and do an adjusting journal entry to either write off the amount or, well, to write off the amount, to close it out. And in your reconciliation, as long as this is 0, then it'll allow you to post the reconciliations. So the next thing you want to do is go through and reconcile any open items and balances for your business partners. Okay, so one of the things you want to do is make sure that the reconciliations are complete. So if you go into down to your reports function, go into your financials, and go into accounting, and go into GL accounts and business partners. So here's where you can select this and make sure that you can check that all of your business partners are reconciled, and you use this report to do that. Also, you'll want to run your aging reports for your receivables and your payables. So under your accounting report, you've got your aging reports, receivables, and vendor liabilities. It's really important that you look at reports that do not span periods. So for example, some reports, you need to print it at the cutoff point because you may not be able to reproduce that report again once you've started posting transactions again. So it's important when you're looking at the reports that you know which ones are going to allow you to go back to that period and give you the exact same value, or that the value is dynamic and changes as transactions occur. If you have that kind of report, I typically would print it to a PDF file and attach it to that account so that you have that report attached to your account and you can always reference it. Okay, and I don't know how many of you folks are using the fixed assets, but you'll want to, reconcile your fixed asset account, make sure that you've got your fixed assets recorded properly so that you get a correct amortization calculation at your year end. Also, and finally, doing the reconciliation of the bank statements and the cash accounts to make sure that they're accurate. And if you're getting audited, or even if a review engagement, they'll be requesting all that information anyway. Okay, go through and make sure you've got all of your allocation expense clearing accounts reconciled, and the inventory accounts as well. And then it's a good idea to run the inventory or audit report and store that, because it's going to give you all of your inventory transactions that have occurred for the year. And finally, you want to look at your accruals and make sure that you've got your revenue and expense accruals in place. Ensure that one of the things I always do is go back and make sure that all accruals from prior periods are closed and posted. Because sometimes, I know that with a lot of these systems now, it automatically creates the reversing journal entry, but you want to make sure that any accruals from a prior period are reversed. It's really important to look at that. And once you have all of that done, then it's time to start to look at, your exchange rates, do your revaluation of your foreign currency accounts, so that you can realize any gains or losses on exchange that you've incurred during the year. Okay, and then under reporting, we have tax reporting. The tax reporting is for the Canadian localization is sufficient for your GST reporting. So there's not all of the jurisdictions have country-specific reports, but this tax one is designed specifically for the Canadian localization. Once you have all of that done, then it's time to go into your financial reports and run your balance sheet, your trial balance, your profit and loss and cash flow. I'm sure that all of you have been through these documents, so I'm not going to demonstrate those specific documents to you. But run all these reports, run them to a PDF, save them. Make sure you've got a copy of your year-end reports off-site. I typically would PDF all of these documents and then store them on a secure device and have them off-site, just in case you have a catastrophe, which sometimes happens, and you don't want to be losing your financials if your system goes down completely. And then I've showed you how to get ready for the next year. If some companies will go in and renumber all of their documents and start fresh with a new set of document numbers for the fiscal year, or you carry on with the existing numbering system that you have. So the other thing that you can give some consideration to is the use of a period 13. Some organizations will have a 13th period. It's not actually a fiscal month, but it is a period that's used for posting all of your year-end transactions, so that you don't mix all of your year-end transactions within your normal accounting functions. And then that way you can separate the postings out, and then when you post it, you still only get 12 months worth of financial statements. To run the period end, you go into administration, utilities, and go into period end closing. You pick the accounts. Now, one of the things that you'll notice on here that we have the retained earnings account as a period end account. I typically don't close out to the retained earnings immediately because I want to see what that account's like. So I'll go into my financials, edit my chart of accounts, and I'm going to create an equity account and say OK. And I'm going to add a same level account, and so now what I have is I have a period end closing account. And what that does is when you do your period end close on the last day of the year, it posts everything to that account. And then on the first day of the next fiscal year, it closes that account to your retained earnings. So that way you're not corrupt or doing a lot of posting into your retained earnings until you finalize your financial statements and your financial transactions. And so that is the period end closing. So again, it's under administration, under utilities, and period end closing. And now you see that we should have a period end closing account. And there we go. So now I've got a period end closing account. It is in the retained earnings area. Oops, that didn't work. Oops. Of course, I'm going to have grief at the end. Okay. Typically that should create that account, and then you're able to post to it. And that's it. And what you want to finally do is go back in and make sure that you've got the final periods closed under your periods. And make sure that they're closed and locked on there. And that is the steps for year-end closing. Any questions?
I just want to say to everybody that I recorded this, and I'm going to send you all copies because there was a lot of a lot of items that James went over, so you'll be able to have it on, you know, for your files if you need to reference on it. But if you have any questions, go ahead. All right, well, if there's no questions, James, did you have anything else that you wanted to go over?
Okay, thanks everybody. Have a great weekend.
Thank you, James, and everybody. I just have a few points that I want to, so look, if you need support on any of these items that James went over, we have a new email at the support desk. So it's support@forgestic.com, and it automatically creates tickets for you if you need follow-up on it. And we're going to be going over, our next break is going to be on the 9th of December, so not next Friday, but the other one. We're going to be talking about our new support ticket system, which is really important for everybody, and I hope that people come in to see this because it's really going to be useful for you if you have any support questions. And I'll be sending the links out for that, not next week, but the week afterwards. And a final call for everyone, just to let you know that our promotion for the month of November, which was, it ends on November 30th. If anybody needs new licenses, we have maintenance for free for 13 months, which is a really nice promotion. And you've got my email if you need it, Tracy, Tracy @forgestic.com. And again, if somebody, I'd like you to send me an email just to make sure that I have your email in stock to send you the recording on this. So thanks everyone, and call us if you need us. Have a nice weekend, everyone. Bye.